Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 37th COT report of this year. Before I start the review, a reminder about two new services, futurestradingguides.com, focusing on futures markets, and of course fxtradingguides.com, our newest service, which is focusing on forex markets, but also we've added cryptocurrencies as well. So back to the review. Let's start off with our first market on our list, the S&P 500, where we had an 18% change in commercials positions, 27 in large speculators. You can see these changes on the charts over here. They're definitely greater than average, but don't get too excited. You can see on this 52 weeks time range that we have seen greater changes in the past. Nevertheless, this is a bullish COT chain signal that of course is indicating further rises in the market. Of course, it would have been nicer to get this signal just at this bottom over there maybe. Opening a 5 years chart, you can see how extreme this market is, and you may see that we are still closer to the bearish extremes, of course not surprisingly, due to this huge optimism in the market. But of course there's some space left to reach those all-time extremes again. Opening our next market, the Kansas City wheat, you may see a 12% change in commercials positions, 11 in large speculators, again above average change size, and again we are talking about a bullish COT change signal suggesting increasing prices early this week. Jumping to the 5 years chart, you may see how extreme this market is. You can see we had bearish extremes, relative bearish extremes in the past a couple of months. You may see their effectiveness in the market. You can see this one back in mid 2017, a beautiful extreme signal pushing prices back down. Again, we can state that we are definitely closer to the bearish extremes, and there's some space left to reach a relative bullish extreme. Maybe the one over here I'm showing you could be a good example for that. Of course, all of these, if you look at this 5 years chart, when commercials are above the zero line at such levels, these can be considered very significant bullish extremes. Those are pretty far away for now. Gasoline is our next market, an 11% change over there in commercials positions, slightly larger than average, but nothing too unusual. So I might as well just jump over to the 5 years chart and have a look at the extreme, which as you may see is much closer to the bearish side of the market than the bullish one, suggesting there may be in medium to long term further declines in the gasoline market. So nothing too interesting until now, but if we jump over to large speculators COT Extreme analysis, you may see soybean oil on top of our list with an all-time extreme in large speculators positions, 240 report extreme in commercials, and you can see this is an unquestionable bullish extreme in the market. Of course, as I've pointed out many times earlier in past reviews, all-time COT extremes should be taken cautiously, because although they are huge, we've never seen extremes such as all times ever before in COT history of a given market. They can easily grow and grow for many weeks before the market reacts. So it's applicable, of course, as well right now. So who knows if this continues. One thing is for sure, it's an unquestionable large stress level that has built up over the years in the soybean oil market, and it's suggesting that there could be a bottom developing soon, as the one I'm showing to you right now on the chart over here. You can see that was a great example, and of course there are some wonderful examples in the past as well. This is definitely amongst the greatest extremes. Of course I'm pointing at the commercials 240 report extreme, and the greatest extreme in case of large speculators. The next market is the copper market with a 97 report extreme. Over there it is a bullish COT extreme, of course, definitely much smaller than the ones that we've seen in silver and gold in recent reviews, but nevertheless it is a strong one that of course we should have a look at and maybe go into deeper analysis, technically speaking, of course, on our own trading platform. And the last market for this review is the lumber market, where we have this 65 report extreme in large speculators, 83 in commercials. You may see this on the chart visibly. Of course, these are significant extremes if you look at the last 2 years or so, but you may see on this 5-year chart that we have seen much greater extremes in the past, which of course draws some caution and may pull us back from any sudden moves. Nevertheless, it is a extreme that has already a strength. It means that in case of large speculators for over a year, 65 reports is equal to roughly 65 weeks. We haven't seen traders at such levels. So we had a bearish extreme in the market early this year, as you may see, that had an effect on lumber market prices. Since then have dropped, and as the market is declining, of course we are moving away from bearish extremes towards bullish extreme levels. Now the big question, of course, how long this stress building up towards the bullish extreme is going to continue before the market starts to react to the signal. That's of course the big question here. So that was all for this COT review. I hope you enjoyed it. Have a great week, and see you this weekend for the next review. Take care. Bye-bye.